To the 36th episode of Business Insights on the 22nd of February 2021. Our episodes are all about being very exciting series hosted weekly on Mondays at midday by a panel of industry thought leaders for business owners who simply want to be in the know about the latest and most significant news and initiatives in the Australian business landscape, which would impact how you do business. Our panel of advisors aim to inform, educate, and provide strategic insights to the changes in the economic, legislative, and financial landscape that affect small business. We aim to guide our viewers to navigate business challenges through COVID-19 and, of course, beyond that. Let's now meet our panel of industry thought leaders. First up, the man who is out and about at the moment, Mr. Adam Lyle from BizDoctor.
G'day, Sam. I'm out here on location in Sydney, up to my eyeballs in helping a client.
Fabulous. Great to have you on board. Mr. Ian McLaughlin from Imperium Accounting and Tax.
Afternoon, Sam, and afternoon, viewers. Thanks very much for being here today.
Great to have you on board. And Lisa Guido from Enigma Mahindra.
Hello, everybody. Hello, viewers. Good to be here again.
My name is Sam Garaci from Monaco Private Wealth, and we look forward to sharing with you today. I should also provide the following general warning. The views and opinions shared on this webinar are designed to be general information only and are not designed to be taken as specific advice for your personal or specific circumstances. Please feel free to reach out to any of the panel members for specific advice to meet your own requirements. So let's get started. I'm intrigued to know what's happening on the road. So Adam, tell us what's going on.
Well, Sam, it's funny, I've had a morning of events, and sometimes when our viewers, when they reach out, either directly or through their accountants, I find myself into situations where I get deep involved in crisis management, and that's what's going on today. I don't necessarily want to dwell on that because that's a whole new topic for a whole new day. What I do want to talk about, though, is collaboration and cooperation between your advisors. It's come to my attention time and time again that I would be approached by a particular client and I say, okay, who's your accountant? And they'll tell me. And who's your lawyer? And they'll tell me. And I ask them this question: do they work together? Do they actually know each other's phone numbers? Do they collaborate? And the answer to those three questions is invariably no. And I want to give our viewers some hints and tips on how to get that going and what the value will be obtained by them if they actually help and guide and ask for them to collaborate with their external advisors. So first of all, the external advisors I'm talking about are their accountants, their bookkeepers, their lawyers, their business coaches, their financial advisors, just like Sam, their HR department, if they have one, that's maybe an external person, just like Lisa. And I want to make sure that they know who those external advisors are, first of all. The second thing is, how often do they meet with them? How often are they engaging? Do they review the documentation or the support that's provided by those external advisors on a regular basis? Is that external advice provided on a routine basis? Is it every monthly? Is it every quarter? Is it biannual? Is it annual? And then what I want to try and do is assist them in getting all of those external advisors aligned with each other. And why do we want to do that? The value that you gain by having all of those external advisors working together in the same way, at the same time, for the same means, should really be in line, first of all, with the business's strategic plan. But most importantly, there are decisions that the business owner wants to make that could have implications across the other areas. Let's take JobKeeper, for example. The accountant would be saying, great, let's get some JobKeeper going. Your HR department is saying, hang on for a minute. We've got to work out who's on tier 1 and who's on tier 2. And your bookkeeper is saying, that's great, but I want to make sure that I'm actually allotting the wages properly in zero. And of course, your financial advisor might be saying, well, that's fantastic. But that could mean that you're going to be getting an injection of cash flow into your business to the tune of tens of thousands of dollars. Let's use that money for really good purposes in terms of further investment in the company or other asset acquisitions, which of course in turn goes back to the accountant because of the asset write-off. So as you can see straight away, just by that little example, by having all of your external advisors in the same room at the same time on the same day could actually mean huge benefits to the business owner and of course the business in its own right. Now, how do we do this? Well, I would ask that all of the viewers today reach out to their external advisors and invite them to come to the business on the same day at the same time. Tell them, hey, I'd really like you to meet my, if they're speaking to their accountant, hey, I'd really like you to meet my external HR service provider. I'd really love for you to meet my bookkeeper. If those external advisors are going to give you any resistance with that, it may well be time to think about how you're going to approach them providing you services in the future. You need to let them know that you're the customer at the end of the day and you're in control of your business and you want all of them to provide a unified, collaborative and cooperative service to you and your business. I hope that's been helpful to our viewers today. It certainly has given me some insight when I continuously get no when I ask those questions, and I encourage everyone to adopt that collaborative way.
Thank you very much, Adam. And what a great way to talk about how you make sure in your business you don't experience a lost opportunity by collaborating with your external advisors. Thank you, Adam. Now on to talking about accounting. Before, why don't we just ask Ian as to what's happening on that front?
Thanks very much, Sam. And Adam, thank you for that. Yes, I definitely do agree. Accountants do work a lot better with their clients if they do have strong relationships with their other advisors from those fields that you mentioned. So just two things from me today. The first one is that the ATO is noticing a drop compared to previous years in terms of lodgements. So when I talk about lodgements, I'm talking about September BASs, December BASs, and then also the 30 June 2020 tax returns. And the major message from the ATO is that they feel that people may not be lodging these because they don't want to incur the debt with the ATO straight away. The message from them is get your returns and activity statements lodged and then communicate with them if you cannot pay the debt and put it into a payment plan. Because as soon as we go under the radar and we don't lodge, then that puts us straight on the ATO's radar. Okay, so it is best to get the returns lodged, put them in a payment plan, and then work with the accountant to make sure that these payments are properly structured into your cash flow. So let's look at a couple of due dates coming up. So the first one is for the December BASs. Now, if they are lodged on your own, then BAS is always due 28 days after the end of the quarter. If, however, they are lodged through a tax or a BAS agent, that person gets another month extension. So the 28th of February is when the December BAS is due. So that's only 6 days away. So you should really be by now working towards, if that BAS hasn't been lodged, you should be working towards getting that lodged, and then that payment should be factored into a cash flow. And if we need to go into a payment plan with the ATO, then make contact with the ATO and let them know about that. The next lodgement date would be the March BAS, which would be, if you lodge it on your own, the 28th of April. And then if you lodge it through a tax agent, it would obviously be right about the 28th of May. Now, in between that, we have another lodgement date, which is where it gets tricky. So the 15th of May is when the actual business end of year tax returns are due for the year ended 30 June 2020. So you should know by now, even if you haven't lodged that return, you should know the liability, and we should be factoring in those payments into your cash flow over the next 12 months. And if we need to go onto a payment plan with the ATO, then we just need to make contact with them. But it's just really important that all lodgements are up to date. The second point for me today is that there has been a phishing scam going on that the ATO has come into contact with. And what is happening is it is a pre-recorded robo message, and it is basically telling people that their tax file numbers with the ATO has been compromised, and that in order to protect their tax file number, they need to transfer funds, I should say, into a bank account. Now, there's been about 684 people that have been scammed by this so far, and a couple $100,000 have already been transferred. I guess the major point here is that the ATO have said that they will never send a pre-recorded message to you. They will always contact you personally. So that's really easy to then not fall for that trap. If you get a pre-recorded message saying it's the ATO, just hang up automatically and don't fall victim to the scam. So that's it from me today, Sam. Thanks very much.
A couple of really good pointers there, and yes, scammers always find new ways to get around this. So these robocalls are definitely one of the new ones that I've heard about. And of course, it's not only ATO; it's also about your telephone bills and a few other ones as well. So yeah, be very mindful of that. Thanks for that. Now on to Elisa. Tell us what's happening on the HR landscape at the moment.
Thanks, Sam. Well, we do have some exciting stuff happening in HR, which has been really brewing for most of 2020. So for the next few episodes, I will go through this in more detail. So for our viewers, please bear with us. There's a lot of information to take. So the Fair Work Commission recently made a decision which changed annualized salary provisions under 22 modern awards, and this will be effective in the 1st of March onwards. So there's going to be a massive transition and change management process. And as Adam said, you do need to rely on your HR consultants, your HR team, and your accountants and your bookkeepers or whoever actually handles payroll in your businesses. So today I'm going to highlight these substantial changes to these 22 modern awards, and they're really known as annualized salary clauses. And again, they commence on the 1st of March. So let me contextualize and define firstly, what are annualized salaries? So annualized salaries are where you pay a fixed annual wage, excluding other award entitlements, which you would otherwise have to pay. What are some of these award entitlements? Penalty rates, overtime rates are award entitlements. And how are these rules about annualized salaries changing effective 1st of March? So if you pay an employee with an annual salary, you will have additional obligations regarding record keeping, pay entitlements, and notifying or agreeing about the employee's salary. So following a lot of discussions about this in the last 12 months in various panels, particularly with these changes, there's a lot of uncertainty about the options that businesses should be taking when they are paying an annualized salaries. And these changes impact the way that you comply with the way you pay the annualized salaries and making sure that you comply with the clauses and the modern award. And there are practical and technical challenges associated with implementing these arrangements. I'm going to show you on the slides now the awards that are affected. So let me share screen and let me show you that. Here we go. Okay, so these are the awards affected. So a massive chunk of a lot of small business advisory teams come from the banking, finance, and insurance sectors. So that sector is affected. Clerks and private sector awards are affected. Same with contact call centers awards are affected. So again, if you look at that list, these are major industries affected and a lot of professions affected by this award. So if you have a look at that, the other one just below there is Telecommunication Services Award. Wool storage, sampling and testing award, salt industry, oil refining and manufacturing. Legal services is another big sector affected here. So these are for any employees or businesses that have employees or work in these areas or sectors. In the next slide, these are the awards that will be amended to include Model Clause 3, and I'll talk a little bit more about that. I just wanted to highlight the sectors or jobs affected by these. So again, manufacturing and associated industries and occupations is a massive, massive industry. Pharmacy or pharmaceutical, rail industry, and only bear in mind that full-time employees will be affected by these conditions, no impact on part-time and casual employees. So What are these options that businesses, in particular our audience now, small businesses, need to be looking at? So I've listed about 6 options here that you need to consider. Again, in the next few sessions, I'm going to be going through each and every one of these options in great detail. So this is just as a summary. So the first option is to, yes, comply with the modern award annualized wage arrangements. In these awards, they're normally called annualized salary provision clauses. So basically the option here is pay the annualized wage in accordance with the clause, pay a set amount for the next 12 months in satisfaction of the modern award requirements. That's option 1, comply. Option 2, a lot of businesses have employment contracts, and these employment contracts have award entitlements that can be set off by payment of an annual salary as recorded in the employment law contract. So that's option 2. Option 3 is what you call an IFA, individual flexibility agreements, where employers can agree with an individual employee to vary the application of their wage in the modern award through this particular agreement. So this is fairly individual, right? The next option is a guarantee of annual earnings. So this is specifically for relatively high income employees, where you can enter into an agreement with them, into a guarantee of an annual earnings by guaranteeing payment of at least the high income threshold. I repeat, at least the high income threshold. That's currently 148,700 for the next 12 months. The 5th option is what you call an enterprise agreement. This is typically where employers bargain with their employees as a collective. So this is for every individual in their business to come to agree to this agreement, and it will contain terms and conditions of employment that are specific to the employer's business. An underpinning modern award will not apply under this option. Most businesses, however, I would think would look at an entirely separate option, which is simply pay in accordance with the award and then pay overtime and penalty rates as they arise. So what does that mean for us? What should employers do about the new rules? The first thing in this week that I'd urge all employers to do is check if your employees fall under the relevant awards. Are some or all of them captured in those 22 awards I've listed? And again, I will put that up on our Facebook and LinkedIn page. Second, ensure that your payroll system and record keeping procedures are up to date. Talk to your accountant, talk to your bookkeeper, who I am assuming does your payroll. If it's an in-house individual in your business, talk to them about your payroll procedures. Then, lastly, consider your own business circumstances and determine which of the 5 options I've listed above, or perhaps a combination of those options, would suit you best. Consider if you would like to pay your employees an annualized salary or pay their entitlements each pay period if an award covers them. There's a lot to take in today, and there's going to be more information that I'll be handing over in the next few weeks. So please hang tight, more information to come. That's it for me, guys.
Thank you, Lisa. What an amazing wealth of knowledge there. And it just goes to show employment laws and everything that goes around is very difficult to follow. And it's very important to have a very well equipped advisor just like Lisa to help businesses be able to make sure that they're doing all the right things from a people strategy perspective. Now onto my update. From an interest rate perspective, over the last few months, banks have had very competitive 4-year fixed rates for owner-occupiers. Some have been hitting below 2%. It now seems that some of these good rates are now filtering through to the 2- and 3-year rates as well, which is interesting, and just goes to show that RBA's actions in the bond market that we've been talking about has had a flow-on effect because of that. Banks have also provided some updates in the recent weeks to the market, with all showing that the loan deferrals continue to fall, which means that there is more normality coming back in. And of course, that's welcomed as much as possible. Of course, the big story in the banking section is the Bank of Queensland that's made a takeover offer to ME Bank, with ACCC clearing the way of the takeover. So it'll be interesting to see how that actually plays out over the next months and obviously the year. Moving on in terms of the property side, there was another strong auction results with key states of Victoria at 87%, on more than doubling the results versus last week. So far more activities occurring now. And New South Wales was at 91%, and South Australia and ACT steady. I visited some open houses on the weekend, and the agent in the Sydney Northern Beaches said that due to the lack of stock, some 1/3 less, that demand and supply remains very tight. And I guess this is why, you know, you're hearing a lot about these increases in property prices, where there just isn't enough properties for sale. And of course, the influx of people coming back to Australia to relive from an expat life has obviously made that hard as well. And he was saying that about 100 groups went through one particular house in Frenchs Forest earlier in that day. So that's an amazing number of people to look at a property. And of course, you know, a client of ours also bought at a record price at an auction on the weekend. And now onto the markets. Firstly, unemployment came in last week at 6.4%, just slightly better than they expected, though this is somewhat closer to 50% more than pre-pandemic. So I wouldn't say that it's still fantastic. Certainly going the right way in some ways. We've had some company results last week. Some were mixed. However, more than 50% of the companies that have been reporting, and they've recorded higher profits than the prior 6 months, which is obviously comparing to the start of the pandemic, where, you know, things were, you know, we were looking at the abyss at one point. And of course, there's this two-speed economy. So we need to be very mindful that some companies will report better, whilst other companies will not do so. Now, profits are rebounding from those major lockdowns. Resources, IT, and healthcare, they've been the standouts of the last 6 months in particular. And this week, all eyes are on the current market darling Afterpay and their release of profit results, which, by the way, they're worth more than Telstra and about 20% away in value from Macquarie Bank and even Woolies. So it's amazing to think that essentially a lay-by system with the use of technology is worth more than some of these companies that have been around for many, many decades. They certainly are priced for perfection. So it'll be interesting to see what comes out of their release later on in the week. Overall, the market was down about 0.2% last week, and we've started the week basically at flat. There'll be more companies reporting this week, and we shall see if that mixed trend continues as well. Now, overseas, the market also took some breather, but closer to home, we shall watch with really great interest the battle between the big tech and the government. Now, I'm sure you would have heard that last week Facebook turned off news in Australia, but at the same time scored an own goal. They turned off critical COVID-19 and vaccination news, as well as emergency services news. So this is going to be a really interesting thing, because now not only Australia has a beef with Facebook, UK and India have become supporters of the government's movement. And I should also say that Google, on the other side of it, has decided to be more cooperative, and potentially a deal is being struck between the government and Google. So these are obviously all on the back of the changes to how the platforms like Facebook and Google pay for media, news media content in Australia and of course around the world. And I guess, you know, we'll see how much mud is thrown from either side of those sides in months to come. I would dare say that, you know, potentially governments are going to have the upper hand, given they're the ones that actually set the laws. And even though Facebook is behaving as if they're above the law, at some point they'll probably have to come within that. But I guess time will tell what that all means. And that's the update from me. I'm just going to open it up to the other our experts as to if there's any questions.
I've got a question for Ian. I got asked this morning. Is there any, given there's pockets of the economy that have suffered more in terms of additional lockdowns, etc., particularly people like the aviation and related industries to that. Have you heard of extensions to the support mechanisms that are in place by the government, i.e. the instant tax write-off and other opportunities? I know JobKeeper is very unlikely to be extended, but there might be some other opportunities. Have you heard anything like that, Ian?
Yeah, look, I get asked the same question, Adam, by a lot of my clients that are in industries that have been directly hit, or others that have been indirectly hit by those ones that were directly hit. So look, at the moment, the answer is no. There is nothing else coming. So unfortunately, we just need to, do as I say, talking about, we need to make sure that we have a proper working cash flow in place to make sure that we are going to survive. And then look, if there are some added benefits that do get announced, then we have to consider those as bonuses, but we need to bunker down as in there is going to be nothing else to come.
I would hasten to add, Ian, that because there is nothing else to come, Sam, that unemployment rate that you've just announced there, that would change quite dramatically post-March. We were talking a lot about this in a panel of professionals that I liaise with, and a lot of the recruitment strategies that businesses are taking, those that are looking at the moment, really have revised quite dramatically, as I talked about last week. And it is largely because a lot of candidates are actually afraid to start looking for work because they would be the last person in the organization that they're about to apply for. And potentially, unless they're fully aware of the situation in that organization, they'll be the first one out. So no matter how unhappy they may be where they are tending to stay put. And this poses as a massive challenge for those organizations that are already poised for growth, already looking at recovery and growing more in terms of sourcing the right talent. And pre-COVID, COVID or no COVID, quality talent has always been rare, and it's become more increasingly rare this time around. So it's interesting. I think we're going to have a lot of interesting episodes post-March to all our viewers, so hang tight.
Absolutely, absolutely, and thank you very much for that. And so very, very insightful information provided by our panel of experts today, and obviously a lot more to come from Lisa about the changes to the laws in the next few weeks. So don't forget to check us out on Facebook. This is broadcasted live on Facebook, also on YouTube, and put on our Business Insight LinkedIn. You'll certainly be able to revisit these, and don't forget to post questions to us or make comments about our what we cover off, so then we can make sure that this is very relevant for what you do as you go along. So till next time, have a wonderful week. And in a great tradition of having a quote to start our week, I thought I would share with you something very unique today, and that is a great quote by a German poet, Hermann Hesse, who says exactly, what we all need to actually learn and listen as we go. Learn what is to be taken seriously and laugh at the rest. What a great quote. So have a great week, and we'll see you again next week.